for credit markets, even from these levels, for a bit of period of time. And the third is what are we focused on? We're really focusing on some of the, I'd say, higher quality investments. There's a lot of really interesting things brewing in the mortgage market, and we've been devoting a little bit more capital to that area in particular.
Let me pick up the first 2 points. Treasuries go nowhere. There's opportunities in credit. Lindsay, do you agree with that?
Yeah, I think it's complicated right now in treasuries. The debt ceiling is a real issue. I know it feels a lot like deja vu. Haven't we been here before? And in fact, we have. Since 1960, we've raised the debt ceiling 78 times. But the world looks really different now versus when we had the big standoff in 2011. I think that's important to keep in mind. And with that backdrop, that makes us kind of cautious on just this overall spread race, thinking that spreads are going to tighten and you want to have that beta. We're positioned cautiously, but what's great about the opportunity in fixed income right now is you can be positioned cautiously, but still have a ton of yield. And we've talked about this before with the opportunity for security selection. There is a ton of dispersion out there, and that's the perfect market to be able to do that kind of work. I agree on the agency mortgage-backed security front. That's something that looks really interesting to us right now. I think there's so much hysteria about FDIC selling this book of mortgages, what that's going to be, the pressure, the overhang on the market. But I think we have to take a step back and contextualize, right? The size that's being sold, which is the Silicon Valley Bank book and the Signature book, is actually really small if you compare it in duration equivalent terms to what we get in the auctions from the Treasury every month. And in fact, as we're learning more about how this sale is going to happen, there's actually an opportunity out there to take advantage of the mortgages that may be attractive on this book. And also, I think when we're learning more about the mechanism, we're finding out that it's actually going to be probably a shorter timeline and less impactful than the market's worried about. So really, there's a lot of concern out there, but there's a ton of opportunity if we can really figure out the facts.
Hey, Lindsay, wonderful to get you with you alongside Asho. To the two of you, thanks for being with us. Coming up on this programme, the Morning Calls, and later, more than halfway through earnings season, we'll break down the latest numbers with MoffettNathanson's Michael Morton. That conversation coming up shortly. Equity markets a tiny bit softer. Let's get you some morning calls going into the open. Jefferies upgrading Masco to buy, expecting shares to outperform as housing sentiment improves. Next up, Benchmark upgrading Intel to buy, saying the worst could be over with Q1 likely marking a bottom. And finally, UBS expecting a more favorable setup in the second half. That stock is down 1.75%. Coming up, Amazon guidance throwing cold water on the tech rally. That conversation with Magnusson's Michael Morton. That conversation up next. Where did April go? The first quarter felt like a decade, and then April went just like that. Equity futures right now, negative 0.2% on the S&P, on the Nasdaq, negative 0.1% there and thereabouts. Amazon was flying after the close yesterday, and then rolled over as we got some soft guidance. We'll talk about that name in just a moment. There's your opening bounce. Switch at the board again to the bond market. Coming into the Federal Reserve next week, yields lower by 8 basis points on a 10-year, 344. Looking to Europe, growth softer than expected. Inflation lower than expected in Germany. The euro, a break of 110 a little bit earlier, just about holding on to that level right now. Earlier in the week came really close to 111. That currency pair negative 0.2%. I'll talk about the oil majors in just a moment. Chevron, Exxon, we'll get to that. $75 a barrel there and thereabouts on WTI, just about unchanged on crude at the moment. About 30 seconds into this session, here's the broader market for you on the S&P 500, negative 0.15%. Similar move on the Nasdaq. One stock to watch that is anything but unchanged over the last 12 hours or so. Amazon. The company's guidance pointing to slower growth. Shares taking a hit on the news. The CFO saying this: customers continue to evaluate ways to optimize their cloud spending in response to these tough economic conditions. We're seeing these optimizations continue into Q2. Ed Ludlow joins us right now. Ed, that is a lot of corporate talk. Can you make it simple for us?
Yeah, simply put, sequentially from the first quarters of the current period, Amazon quantified that the top line growth for AWS would slow by 500 basis points. That's not the direction of travel that investors wanted to hear, because remember, in many quarters over recent years, AWS has accounted for almost all of Amazon's broader operations.